You're scrolling through your investment app, looking for that perfect stock under $5 that could potentially transform your portfolio, and suddenly you come across GoPro trading at just $1.73. Yes, that GoPro, the company that revolutionized how we capture our adventures, the brand that became synonymous with action cameras, is now available for less than the cost of your morning coffee. But here's the million-dollar question, or should I say the $1.73 question. Is this a golden opportunity to buy low before a massive comeback, or is this a sinking ship you should stay far away from? Today we're going to dive deep into everything you need to know about GoPro's current stock situation, and trust me, by the end of this video, you'll have all the information you need to make an informed decision. So stick around, because what I'm about to reveal might completely change how you view this investment opportunity. Let's start by understanding where GoPro stands right now in the market. As of December 2025, GoPro is trading at $1.73 per share. Now, when the market opened today, the stock was actually at $1.77, and throughout the trading day, we've seen it fluctuate between a low of $1.72 and a high of $1.79. This tells us something important. The stock is experiencing relatively tight trading, meaning there isn't massive volatility on a day-to-day basis, at least not in the short term. But here's where things get really interesting. If we zoom out and look at the 52-week range, the picture becomes dramatically different. The stock has traded as low as 39.8 cents. Yes, you heard that right, less than 40 cents per share back in April 2025. And as high as $3.05 during this same period. This means that if you had bought GoPro at its absolute lowest point this year and held it until now, you would have made over 330% returns. That's the kind of gain that makes investors' hearts race. The current market capitalization of GoPro sits at $276.33 million. Now, for context, this places GoPro in what we call the microcap category. Companies with market caps under $300 million are considered extremely small in the investment world, and this comes with both opportunities and significant risks. Microcap stocks can experience explosive growth because they have more room to expand, but they're also more vulnerable to market pressures, financial difficulties, and even delisting from major exchanges. It's like comparing a small speedboat to a massive cruise ship. The speedboat can change direction quickly and move fast, but it's also more likely to capsize in rough waters. GoPro is that speedboat right now, and the waters have been pretty choppy. Now let's talk about performance, because this is where the story gets even more compelling. Over the past year, GoPro's stock has risen by 38.4%. That's a significant gain, especially when you consider that many established companies struggle to achieve double-digit annual returns. But here's the thing you need to understand. This 38% gain is actually a recovery story. Remember that all-time low of 40 cents I mentioned earlier? That happened on April 9, 2025. The stock literally hit rock bottom, and many investors thought GoPro was finished. Some even speculated about bankruptcy. But something changed. The stock began climbing, slowly at first, then with more momentum, eventually more than quadrupling from its lowest point. This kind of recovery doesn't happen by accident. It happens when a company starts making strategic changes, when management takes action, or when investors begin to see a path forward that they didn't see before. So what exactly does GoPro do, and why should you care? At its core, GoPro is an action camera company, but it's evolved into much more than that. The company produces several camera models including the Hero 13 Black, Hero 12 Black, Hero 11 Black, Hero 10 Black, and their 360-degree camera called Max. These aren't just any cameras. They're specifically designed to capture life's most extreme moments. Whether you're surfing massive waves, skydiving from planes, mountain biking down treacherous trails, or even just recording your family vacation, GoPro cameras are built to withstand conditions that would destroy a regular camera. They're waterproof, shockproof, and incredibly compact. But GoPro isn't just selling hardware anymore. They've also developed a subscription service model with tiers called Premium and Premium Plus, along with a mobile and desktop application called Quick that helps users edit and share their videos. They even sell lifestyle gear like bags, backpacks, and clothing. The company has built an ecosystem around their brand, and this diversification is crucial for their survival and potential growth. One of the most exciting developments for GoPro in 2025 was the launch of their Max 2 360-degree camera. The company estimates that the total addressable market for this type of camera is nearly 2 million units annually. That's a substantial opportunity, especially considering that 360-degree content is becoming increasingly popular on social media platforms and virtual reality experiences. Even more impressive, GoPro won a 2025 Technology and Engineering Emmy Award for their innovative 360 technology. Winning an Emmy isn't just about prestige, it's validation from industry experts that GoPro is still pushing boundaries and creating genuinely innovative products. This matters because one of the biggest questions investors have about GoPro is whether the company can still innovate in a market that's become increasingly crowded with competitors, including smartphones that keep getting better cameras. Let's talk about the financial reality of GoPro right now, because this is where we need to be brutally honest. The company achieved something significant recently. They posted their second consecutive quarter of positive cash flow from operations, with a $12 million improvement year over year. Positive cash flow is crucial because it means the company is generating more money than it's spending on its day-to-day operations. However, the company still has negative earnings per share of -76 cents, which means GoPro is not profitable overall. They're losing money on a per-share basis, and that's a red flag for many investors. In the first quarter of 2025, revenue came in at $134 million, which was actually down 14% year over year. Declining revenue is never good news, but here's the counterpoint. The company's operating expenses in that same quarter were down 26% year over year. This is part of a larger strategy where GoPro plans to reduce operating expenses by nearly 30% throughout 2025. The logic here is simple. If you can't grow revenue immediately, you control what you can control, which is your costs. Looking ahead to 2026, GoPro's management has laid out some ambitious targets. They're projecting adjusted EBITDA, which is a measure of operational profitability, to be greater than $40 million. They expect subscription revenue to grow by 5%, which would bring their subscriber count to 2.4 million people. That's significant because subscription revenue is recurring and predictable, unlike one-time camera purchases. The company also expects to end 2026 with approximately $80 million in cash on hand. If GoPro can hit these targets, it would mark a real turnaround for the company, transforming from a money-losing operation to a profitable, cash-generating business. But, and this is a big but, there are no guarantees these projections will become reality. The challenges facing GoPro are substantial and we need to address them head-on. The fourth quarter projections show that unit sell-through is expected to decline by 18% year over year, primarily because the company didn't launch a new flagship hero camera during that period. When you're a hardware company, new product launches are your lifeblood, and skipping a cycle can hurt sales significantly. Additionally, gross margin is expected to decline from 35% to 32% in the fourth quarter due to tariffs. Tariffs are essentially taxes on imported goods, and since GoPro manufactures many of its products overseas, these additional costs eat directly into profitability. The company has also acknowledged heightened uncertainty due to volatility in tariff rates, consumer confidence levels, intense competition, and global economic conditions. Any one of these factors could derail their recovery plans. Perhaps most concerning is that financial analysis suggests GoPro has a high probability of going through financial hardship. This isn't just pessimistic speculation, it's based on analyzing the company's debt levels, cash burn rate, revenue trends, and overall financial health. When analysts say a company has a high probability of financial hardship, they're essentially warning that bankruptcy or severe financial restructuring could be possible if things don't improve. This is why GoPro trades at such a low price despite having been worth billions of dollars at its peak. The market is pricing in significant risk. So what do the experts think? Well, Wall Street analysts have weighed in with their opinions, and the consensus isn't encouraging. The average 12-month price target for GoPro is $1.30. Remember, the stock is currently trading at $1.73, which means analysts believe it's actually overvalued right now and could drop by about 25%. The overall analyst rating is classified as strong sell, with a projected downside potential of nearly 25%. The consensus rating across multiple firms is moderate sell. Now, it's worth noting that analysts aren't always right. They've been wrong plenty of times before, but when the overwhelming majority of professional analysts who study this company for a living are saying sell, that's information you cannot ignore as an investor. But let's balance this with the positive factors, because there are genuine reasons for optimism. First, the subscription model is growing at 5%, and recurring revenue is the holy grail for any business. Every month, GoPro is collecting predictable income from subscribers, and as this base grows, it provides a financial cushion that helps weather downturns in hardware sales. Second, the company has new product launches planned for the 2025 to 2026 timeframe. Innovation is critical in the tech sector, and if GoPro can release compelling new cameras that capture consumer imagination, sales could rebound quickly. Third, those cost reduction initiatives we discussed are real and already showing results. A leaner operation can become profitable much faster than a bloated one. Fourth, GoPro is forming partnerships around AI content creation, positioning themselves to leverage artificial intelligence trends that are reshaping how people create and consume media. And fifth, that Emmy Award I mentioned isn't just a trophy, it's proof that GoPro's technology is still considered industry-leading. On the flip side, we cannot sugarcoat the negatives. Revenue continues to decline in the near term, and that's problematic because eventually, you can only cut costs so much before you start damaging the business itself. The company is still not profitable, which means they're burning through cash reserves while hoping their turnaround strategy works. Competition in the action camera market has intensified dramatically. Not only are there dedicated competitors like DJI making excellent action cameras, but smartphone cameras keep improving to the point where many casual users don't see the need for a separate device. Supply chain pressures and those tariff issues create cost headwinds that squeeze margins. And perhaps most significantly, those analyst ratings paint a bearish picture that could become self-fulfilling if institutional investors continue selling or avoiding the stock. Here's something interesting that shows management confidence. GoPro's CEO personally invested $2 million of his own money into the company recently. When executives put their personal wealth on the line, it sends a powerful signal that they believe in the company's future. CEOs have access to information that regular investors don't, and while insider buying isn't a guarantee of success, it's certainly more encouraging than insider selling. This investment suggests that leadership genuinely believes the turnaround plan will work and that the stock is undervalued at current prices. So where does all this leave us? GoPro at $1.73 is undeniably a high-risk, high-reward opportunity. The stock has already demonstrated it can move dramatically, rising over 300% from its April lows. If the company executes its 2026 plan successfully and becomes profitable with $40 million in adjusted EBITDA, the stock could easily double or triple from current levels. Imagine if GoPro returns to just $5 per share. That would be nearly a 300% gain from today's price. But here's the brutal truth. There's also a very real scenario where GoPro continues struggling, burns through its remaining cash, and the stock drops below that 40-cent low we saw earlier, or the company faces even more severe consequences. If you're considering investing in GoPro, here's my honest assessment. This is not a stock you put your life savings into. This is not a stock that belongs in a retirement account. This is not even a stock that should represent more than 2 to 3% of your overall portfolio. GoPro is what we call a speculative position, meaning you're essentially making a calculated bet that the company will successfully turn around despite significant headwinds. Only invest money you can genuinely afford to lose completely. That's not being dramatic. That's being realistic about the risk profile we're dealing with. The analysts saying strong sell and projecting downward price movement could absolutely be correct. The financial hardship warnings could materialize into reality. However, if you believe in contrarian investing, if you think the market is being overly pessimistic, if you see the potential in their subscription model and new product pipeline, and if you can stomach the volatility and risk of potentially losing your entire investment, then GoPro might be worth a small speculative position in your portfolio. The story of GoPro at $1.73 is ultimately a story about second chances. This company created an entire category, became a verb like Google or Uber, went public with massive fanfare, then struggled as competition intensified and smartphones improved. Now they're fighting for relevance and profitability in a market that's moved on in many ways. Whether they succeed in this comeback attempt will depend on execution, market conditions, consumer demand, and perhaps a bit of luck. The price you see today reflects all the uncertainty, all the risk, and all the potential wrapped into one number. What that number will be in 6 months, a year, or 5 years from now is anyone's guess, and that's exactly what makes investing both terrifying and potentially rewarding. If you found this analysis helpful, please hit that like button, subscribe for more deep dives into investment opportunities, and drop a comment letting me know what stock you'd like me to analyze next. Until next time, invest wisely, manage your risk carefully, and remember that in the stock market, knowledge is your most valuable asset. And most important thing, I am not a financial advisor, and it's not a financial advice.